Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is February the 13th, not quite Valentine's Day yet, so don't be rushing to the door when it rings thinking your flowers have arrived, guys. That's tomorrow. Oil prices trading this morning in and around flat, a little above $82 on Brent. A few dollars behind on WTI, which has been the sort of case. Oil prices holding now into the second day of the week, with having had a big run up last week, up 6%, and now looking like consolidating those gains, perhaps. Let's go to Peter McGuire, CEO of XM Australia, to get his opening thoughts this week. Peter, the momentum from last week hasn't continued, but we haven't seen a retreat. Your thoughts? Is this a consolidation before another mountain climb?
Well, good morning, Sean. Greetings from Mumbai, actually. Here I am, and I've got to
Mumbai.
say, yeah, and I'll be over to see you over probably later in the week.
Great.
Yeah, I think a couple of things. First off, that momentum and the push last week was just extraordinary. 6%, as you mentioned, up. Traders were rubbing their hands with glee because it was just such a big, strong week to be bullish. And I think that obviously Monday the wind dropped out of the sails, but it's probably a little bit exhausted to the upside. And it's not unusual, Sean, when you see these big moves, that it just takes a little bit of a breather. As you said, there was no washout, and that's certainly a good sign if you're bullish energy, bullish crude, that is. And I think that where the US dollar is sitting at 104.20, there's no real movement at the moment as far as currency. Equities are on fire. We saw the S&P break through 5,000. We saw Dow hit an all-time high overnight, and we've seen the Nasdaq crunching down on 16,000. So, there's no shortage. I just look now, we're at 2.5% plus up for the Nikkei 225. Who can believe it? It's at 38,000 points. And I just reminds me back at 39, maybe it's a sucker rally we're all waiting to see eventuate.
Peter, your thoughts, just picking up on that. Of course, Saudi Arabia, the swing producer, the king of OPEC plus and OPEC for decades now. Are we in some kind of end game here where idle capacity, A, is no longer going to be funded, and B, which is the other point he was making, is not necessary in the markets today are much more resilient, much more diverse, and so the combination of all that makes the burden of the requirement less necessary, with US dipping into SPR, strategic reserves when there is any sense of emergency. Your thoughts on his comment, Peter, and what they might point towards going forward?
Well, I agree. And Sean, I think that's one of the great challenges impacting all producers, and those big producers, the elephants in the room like the Saudis and, of course, Russia. And now, as you mentioned, the US. It changes the footprint because there's no shortage as far as oil really in the world, if you're looking at it from a production standpoint, and demand seems to be inching up. I was over there in Fujairah, and that headline number moving out 25 years is 117 million barrels stuck in my mind pretty well. So we're incrementally gaining probably 1.5 million. I look at India, and I've been here for the best part of 5 or 6 days, and it's nothing short of mind-blowing as far as construction, infrastructure spend. The rail system, Sean, the demand for bitumen, the demand for oil and energy and electricity. So that storyline is not being challenged anywhere. And there is so much of the world being rebuilt as we speak. I think the overall demand picture is going to be very, very strong, probably far greater than we even think about, due to population and mobility, and driving that change or driving that demand is youth and engagement, as far as wanting to rebuild the world and have bridges and roads and underground tunnels and all of that sort of thing. So it's an exciting time for the market. And I look at even Saudis and their point, building a $500 billion corridor or 300 billion. It's just quite incredible. So my views on the subject don't change, Sean. I think we're in a hyper bull market and a hyper commodity market.
Peter, just picking up on that, I mean, last year this time, we were stuck with this very dominant narrative, recession, 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 that, you know, that never came. This year, we're kind of starting with this idea of China weakness, China weakness, China weakness. And you yourself obviously have been a big sort of have a reference and reminded us how poorly Chinese equities have been doing compared to the rest of the world. 6 weeks in, obviously, it is the Chinese New Year. What do you think is the Chinese narrative this year? What are we getting wrong about it? What does it feel like to you?
Well, Sean, twice last year we saw stimulus. We've seen one jump already this year. 4,300 was it's the same story. 4,300 this time last year, or around about for the equity CSI 300. Now it's at 3,300 or 3,200, and it had a little bit of a rally over the last week. It's shut this week, as you know. Now the next part of it is, where does China build on this? What does it need to get really reinstated or re-energized from an equity market standpoint? Because we say 4,300, but really their peak was 5,800 going back. So it's nearly wiped out 48% of its equity market in the last 3 years. Now that tells me it's a depression. It's not a correction, Sean. That's a severe depression. So there's the
Is
first
that
part.
deflation?
It's got to be deflation. I mean, we're conscious of that, and we're conscious as far as how do they manage that forward with a 90 million apartment overhang. Who's holding the debt? We keep on discussing those big points, but they're the ingredients that tell you the storyline. And this is where how we move forward. They need very strong demand globally from consumption. We've got credit card debt globally at record highs. We've got net savings back at 2000 to 2008, 2007, 2008. Time frame for US consumers. So no one's got any money. Everyone's paying exorbitant credit card bills, and they're all living on the never, and inflation's biting them very hard in the wallet and the purse. Jobs are up in the States, sure, but they're all part-time jobs, and there's the next part of the story. And companies are now downsizing. So how does China play all this? I'm not sure how it does it. I mean, it needs to really.
But clearly they don't have the stimulus option. It seems, I mean, they're doing dribs and drabs, but there's no bazooka coming around the corner. There's no cavalry coming over the hill here.
Oh, no, and no, not at all. And they've told hedge funds, as far as short sellers, exit the market, don't be involved. So all of those components, as far as driving stock prices lower, they've tried to manage. So I don't know where the cavalry comes from, because you need strong global demand to buy the finished products. The old storyline of Jim Rogers was a classic. Someone somewhere is buying nickel out of the ground, melting it down and turning it into a pot and a pan. Well, those people have bought pots and pans. There aren't any more people buying the pots and pans at the moment. They haven't got the money to buy a pot and pan. So the consumption is very dry, and this is probably going to be very interesting over the next matter of years.
A follow-up on that. If China exports deflation, exports declining prices, is that a good thing for the world, which is trying to still bring inflation under control? China exporting deflation, not good, obviously, for China, but ultimately, could it be good for the rest of the world?
You would think so, Sean. I mean, when you're thinking about prices, you want some sort of respite. And the only way that you can have respite from the wallet or the purse is something that cost 100 yesterday, now costs you 95 today. And that's an exaggeration, but that's what deflation is. And that's what the consumer's after. He and she wants some buying power, and they're just not getting it with the ammunition that they've got. So the only alternative is a cheaper product. And it's a race.
You wonder if it would become attractive to China to let the yuan float a little bit and give us a bit of more accurate reflection, perhaps, of the market value. They could win from that, perhaps. Well, we'll have to wrap it up there. Brent, more or less at the ceiling of this sort of $10 swing up and down for the last few weeks. Will it take this consolidation and move higher, break out of this band that we've been trading in, or will it retreat again as it has ping-ponged up and down? We'll have to see. But for now, thank you so much. Walter in Oman, and Ram and Peter in India. Maybe they can go out and have a chai, and we look forward to seeing you, Peter, in Dubai in the not too distant future. Thanks, guys. here every morning at
Thank you.
10:30
Thanks very
UAE
much.
time.
Thank
All
you,
the
guys.
best. Have a good day.
Bye.
Bye. Bye. Bye.